Welcome back. You're watching us here on Chartbusters, the stock that has been literally busting the charts, not just today, but over the last couple of years. So this year itself, it's been a 175% up move on Titagarh Rail. And if you just take a look at the last 12 months or so, it's been a near four-bagger as well. Today as well, rallying on the back of a strong set in the first quarter. Revenues have doubled. EBITDA has grown by about 165% and the net profit grown by 180%. Over the last few months, we've had multiple conversations with Umesh Chowdhary, who's the MD and Vice Chair of the company. He joins us yet again to discuss these numbers, but more importantly, the outlook for the company going forward. Thanks a lot, Mr. Chowdhary, for joining in. Always a pleasure speaking with you. The first question that begets asking is 910 crores in terms of quarterly revenues. I don't remember you doing that, in a very long time. Do you think this 900 crore per quarter, 900 to 1,000 crore per quarter is the new norm going forward? And by that measure, should we look at 3,500 to 4,000 crores in terms of revenue for this year at least?
So yeah, hi, good morning. Always a pleasure being with you. It's a good first quarter number, 911 crore. But if you look at what we did in Q4 last year also, we did 974 crore of revenue in Indian operations. So, the whole ramp up that we have done is to at this stage be able to stabilize at this level at about 900 crore at level. And then, of course, going forward, our endeavor is going to be, as you can see from the segmental results, the majority or the bulk of it is coming from the FTRS or the freight rolling stock or rail systems right now. But going forward, the passenger rail system business should also start contributing more significantly, thereby giving us some more boost.
So 3,500 crores plus, right, is what we look at for this year.
So I would not be speaking about any forward-looking numbers as a policy, but we have been able to stabilize over the last 2 quarters at the 900 crore mark, and our endeavor is only to grow from here.
Okay, got it. So your endeavor is to hold on to this quarterly run rate. So we'll do the math and we'll say, putting that math down, it should be 3,500 crores plus. By the end of this year, we'll understand whether or not our calculation is correct. Now, with the revenue is growing, there's operating leverage as well that's playing out. Could you tell us what is the guided margin? I think in the past, you were looking at high single digit, 8 to 10%. This quarter, it's a little bit better. Want to revise the margin outlook upwards?
No, so we would keep the same margin outlook. We would continue to give the margin outlook of say 10%. I would say 8 to 10%, but because the volumes are growing, I would say 10%. You see, in our business, quarter to quarter margins can change based on movements or the mixture of products. Whether more wagons have been sold to private sector or more to the railways. The steel prices have been soft in the last quarter, so we got some advantage of that. But on a blended basis, on a long-term basis, I think a sustainable margin we would like to be conservative, would be around 10%.
All right, would be around 10% is what you're looking at. But, on the margin front itself, if you could give us a sense of what is the margin differential between freight rolling stock and passenger? Freight rolling stock is currently 49% of your order book. How much is that, likely to be going forward? Passenger, you said, in terms of its contribution will increase. Then there are these metro orders that you won, etc. as well. Do they come at a higher margin? And structurally, what we want to understand is there a case for margins to improve?
So yes, but that's going to be taking some time. So in the business, the core business of both the freight rolling stock and the passenger rolling stock, we believe that the margins would be around 10% in both of the businesses. But the margin improvement will come by way of backward integration, which is a part of our strategy, particularly for the propulsion and other components. So we've already started making propulsion. Our traction motors have gotten approved by the Indian Railways. But the whole process of being self-sufficient on the propulsion side, which will really lead to a significant margin improvement, is going to take maybe a couple of years. And that would really see that the passenger rolling stock or the passenger rail system margin improve by 3 to 4%, up to that much, by when we are able to integrate the entire component strategy with the passenger rail system business. So I would say for the next couple of years, both the segments, we would look at a margin level of 10%. And going forward, the passenger rail system margin would improve significantly once we've been able to implement the backward integration strategy.
All right, Mr. Chowdhary, you're sitting on a healthy order book, which is flashing for our viewers on the screen. But what kind of order inflow are you looking at for this year? And if you could give us the number of last year, so we have a comparative number as well.
So last year, of course, it was a transformational year. We started March 2022 or April 2022 with just about 1,500 crore. We closed March 23, or we started April 23 at about 27,000 crore. So it was, of course, a complete game-changing year as far as the order book is concerned. Going forward, there are many projects that have been announced that are in the pipeline, whether it is in the metro space or it is in the Vande Metro space or further Vande Bharat trains. Also in the wagons, the target of 3,000 million tons by the railways by the year 2030. So we've been hearing media reports that there should be another 40,000-50,000 wagon tender that should be out soon. But, if we really look at our the freight rolling stock business, we have an order book which is taking us through at our optimal capacity for the next 2.5 years. So we believe that the order pipeline will keep on building. It's not something which is kind of making us lose any sleep at this point of time.
All right. Just a quick word on the update of the status of RVNL and the Russian players JV, because I remember, that those 120 train sets, you said that if they do come up for any rebidding, you're a willing rebidder. Has there been any update on that?
The media reports said that the problems have been resolved, and I remember having spoken in your channel also that I believe that these are issues that may happen, teething troubles, but they should get resolved. And I understand that the issues have gotten resolved, and the project of the Russians and RVNL was moving forward. But this I'm speaking purely from the media reports that I have read. I have no other information about it.
All right, so that means that you're happy with the 80 train order that has come up for you, and you're not looking to buy that 120 as well. But
we believe that there is enough of a runway on the Vande Bharat, because there are the trains that are the plans of the railways to modernize the system and the whole the whole forward-looking. Vande Bharat has become synonymous with aspirational India. So I believe that going forward, the trains are going to change, and there will be enough opportunity. So I don't think there's going to be a dearth of business as such.
Okay, thanks a lot for that, Mr. Chowdhary. Well, time to slip into a short break, but before we do that, a quick programming reminder. Today, CNBC-TV18 will host What Will India's Largest Summit on Gender Parity in Chennai. Leaders from all walks of life come together to brainstorm and ensure we take decisive steps to bridge gender inequality. The event starts at 5 p.m. and we'll bring you live coverage right here, only on CNBC-TV18.